Yeah, so we've covered a lot of topics, a lot of questions from our clients, and I guess we go down to the bottom line. And uh, probably ito talaga yung pinaka-concern ng COL clients who attended today's market briefing. A lot of them are asking, halimbawa, is it a good time to invest now? Better to wait until the economy recovers? Will equity funds be still okay to invest in today's environment? Or is it still safe to invest in this time of pandemic? So you get the sense that people are wondering, what do they do today? So perhaps I can get the quick thoughts of all of you, each one of you, one by one. How should clients invest their money in today's market environment? Let me start with you, Richie. Now, as a fixed income guy, sinabi mo kanina that interest rates will probably still go high. How should bond investors look at this market? And would it be better na mag-money market na lang sila based on what you said kanina? Or is there still room for fixed income investments in their portfolio?
Okay, thanks, Mark. So again, that would boil down to their risk appetite and objective. So if they're happy with steadier and less volatility returns, then money market funds would be perfect for them. Or if they just want to start first, try it out first, that's better. But if they're more long term, then bond funds definitely will still have a place in their portfolio, especially since as we've seen over the past few years, we really can't tell naman na bond funds will be negative. There's still some parang there's still a chance that it can still yield higher. So money market most likely can yield 1 to 1.5%. For bond fund, maybe can yield slightly negative or 0%, but it can also give 3%, 4% since they're more invested more on the higher yielding government securities and credits compared to the time deposits that probably they're used to.
Yeah, thank you, Richie. What about you, Sir Sam? In terms of fixed income investments, do you share the same view?
Yes, I share the same view that if the clients are actually quite wary or risk averse as of the moment, then maybe they should stick to something on the shorter end of the yield curve. Do not buy anything very, very long. Do not buy the 25-year bond right now. If you have a choice between a money market fund and a bond fund, go for the money market. For now, at least it's a good way of parking your money and riding out the possible increase in interest rates. And then, and if you can actually hold on to your investment, you may want to consider buying corporate bonds. Something about buying corporate bonds is that you can buy, and if you can hold on to maturity, the corporate bond actually provides a spread over government securities of the same tenor. So it provides you a little bit more of a incentive for holding on to the bond. That spread is actually the reward that the investor gets for buying into a credit, something with a bit more of credit exposure versus that of the government. And looking at what could possibly get is that actually, as of today, there was a particular issuance for today for a 3-year bond. A investor actually could get roughly about 3%. That was roughly about 40 basis spread over government securities of the same tenor. And if you happen to buy the 5 years, 5 years as of today would give you roughly about 3.7, 3.75%. So again, as Ritchie mentioned earlier, the part of the talk, if you can hold on to your money until maturity, you may want to consider corporate bonds as well.
Right. So thank you, Sir Sam and Richie. Very clear. So let's try to prefer siguro shorter term instruments or consider yun nga corporate bond. But as Richie mentioned, uh, depends on your circumstance also. There could still be a place for specific bond funds. Now let's go to the equity experts. Let me start with Sir Phil. Sir Phil, based on the concerns of clients and what you said earlier, that maybe 8,300 is something that can still be achieved, even if not this year, maybe next year, mid next year. how should clients invest their money in the stock market?
Okay, if you're gonna, I mean, specifically to the stock market, because I did want to, I mean, being the chief investment officer of Atram, I wanted to address the question on the whole, because 2018, for example, bond funds gave you north of 10%, right? So my advice to all of you COL customers, you guys are stock people. I mean, I'm a third generation stockbroker. Stocks are in my blood. You need to look at fixed income to make it part of your portfolio. Okay, that's the message first to give. And it's not all for timing, and it's not all just to park your money. It can actually give you alpha. In 2018, it certainly outperformed Philippine equities. And not only that, it gave you double-digit returns. So don't disregard fixed income. Look at it, number one. Today, be underweight fixed income. Today, now is a time to be long equities. And I think you need to think a little bit. You can mix it up. So obviously, we sell funds to you folks. And how I would approach the market today is you don't want to miss out on beta, number one, because that is where the flow will come from. That is where the index will move. If the index moves up, it's because the large caps move. You can have small caps move. You can have Converge go up 30% and it doesn't impact the index, right? So if you're betting on the index move, you need to bet on beta. But at the same time, you need to, I believe growth is going to be an important aspect, and a recovery place are where you need to go overweight on. So that's how I would approach this market move. Cling on to that beta, but continuously add to the alpha growth side, because what's going to allow for the foreign money to continue to come back to the country, if it just started, is any smell that CAPEX is starting again for the companies, right? The reason they pulled out is they saw that people pulled back on CAPEX. When you pull back on CAPEX, your earnings growth disappears. But when CAPEX comes back, then the vision of 2 or 3 years of earnings can come back. And that's going to drive the foreign money back in. The smart money, the money that stays long term. And I think that's happening. When you look at CAPEX numbers today versus last year, they're higher, much higher than they were. Not quite where they were 2019, but much higher. And so that's a good sign for that flow to happen. So strategy, make sure you cling on to some beta, large cap, and continuously add to your small cap alpha exposure as you move along.
All right. So thank you very much, Sir Phil. What about you, Miguel? How would you advise clients to invest their money, specifically in the stock market, given what you said this afternoon?
Okay, there's really a lot of factors that will affect stock market return, what you should buy. I mean, that's why you invited everyone here to shed light on that. So what I can advise investors is just pick a fund manager you trust, a fund manager you believe in, and invest in their mutual fund. We're gonna worry about your money for you. We're gonna worry about where to put, in what stocks to put it. So just maybe peso cost average if the market is too hard to time. Like honestly, who thought we would be hit by COVID last year? Transformed our lives in ways we would never have imagined 2 years ago. So just put your money in a mutual fund, and your fund manager will take care of the rest. While everyone is afraid, while there is still fear, that's the point where you should be buying. And that's the point where 12, 24, 36 months from now, you're going to make a lot of money. Now, and that time is now, not like when everything's all clear.
Yeah, thank you, Miguel. So finally, siguro we can ask Sir Edser. Sir, for our investors looking at the second half of this year, what's your advice? How can they invest their money in today's environment?
Okay. First of all, you have to determine your risk appetite. Okay. If you're really basically, what is your goal? Are you looking at maximum return, or are you just looking at, a small return, but your capital is protected? I think that's the first thing that you have to determine. However, if you want a maximum return, wag mong sasabihin na all of a sudden you want to protect your principal. You have to minimize risk. That's not enough. It doesn't go hand in hand. So if you're looking at a maximum return, then I think I would advise you to go primarily on mutual funds. I believe that a big number of your clients are basically trade their own account. Okay. However, there's also a big portion of you guys or your clients doesn't have the time. So it will be better for you to uh, um, uh, assign someone like a fund manager to handle your money. And I think, and considering that we've been discussing this, that I think we're expecting that things will be better, at least for the next starting today until next year. Then the best thing to do is go for mutual funds, go for equity fund, or equity linked funds. So I think that's basically it. Or basically, if you also have the time, then I think it will also be a good strategy if you can set aside a money that you're going to trade, and you're also going to set aside something for for other companies to manage your money. And in that way, you'll be able to leverage things up.
All right. So thank you very much, Sir Edser. Probably just to summarize the thoughts of our experts this afternoon. So we've heard from the fixed income experts that, yeah, likely inflation will be more manageable for the second half of the year, but interest rate pressures will still be there. So baka umakyat pa yung interest rates. And what that would mean is that returns for fixed income investments would have to be managed in terms of our expectations. Probably not the same magnitude as what we saw in the previous years. And as mentioned by Sir Sem and Ritchie, we might want to favor the shorter instruments, maybe money market funds, but still may place pa naman for fixed income funds for specific situational needs. And then for our equity market, we're looking at it largely as a reopening play. So Sir Phil mentioned that the 8-3 target that they mentioned as early as last year is still in the cards, as long as we see mass vaccinations happening. So sila Miguel and Sir Edser talked about different sectors that we can take a look at, and select our investments from. So there's a lot of opportunities that can be had in this market. And I guess marami tayong natutunan. And I'd like to leave everybody with this thought. And I'm sure the fund managers would agree with me on this, especially matagal na talaga sila sa industry. No? If there's anything that we can learn about investing, and it never fails to remind us yung pag-i-invest, no? It is that markets always move ahead of actual developments or fundamentals, as they say. And so it is very important that we always stick to our strategies and position ourselves ahead of the markets instead of being reactive. So I think Sir Phil mentioned that, Miguel also emphasized that, especially for looking at 12 to 24 months from here on. So I guess the path to recovery, our path to recovery in particular, is not a question of if, but more of when. And so going back to my point, I think you always want to stay ahead of the market. And so maybe take this chance for all our clients to really act on the opportunities we talked about today, whether it's through buying mutual funds being managed by our guest experts or doing the investments on your own.